Welcome to the Deep Dive. Today we're jumping straight into an investor presentation from Kalyan Jewellers India Ltd.
That's right. It covers the quarter and the full year ending March 31st, 2025.
And your goal, listening in, is to basically walk away with a really sharp understanding of how Kalyan Jewellers is doing, their performance and where they're headed strategically.
Exactly. We've gone through this pretty detailed report and distilled it down to the key takeaways for you. It's your fast track to understanding a major player in India's jewelry market.
Yeah, and they're definitely not a new kid on the block. Kalyan Jewellers has this, century-old history. It actually started with textile mills back in Kerala in 1908. Then textile retailing in 1913, that was T.S. Kalyanarama Iyer.
Right. And the shift to jewelry only happened much later, didn't it?
Yeah, 1993. That was the grandson, Mr. T.S. Kalyanaraman, who opened the first jewelry showroom in Thrissur. Quite a legacy there.
And, that long history, that 100 years, it's not just a nice story. In the jewelry business, trust is everything. That legacy gives them this huge reservoir of trust. It's a big advantage.
Absolutely. So in this deep dive, we're going to really unpack Kalyan Jewellers. We'll look at their strengths, how they're trying to connect with you, the customer.
Their customer engagement strategies.
Right. And technology's role, their internal, controls the checks and balances, and of course the recent numbers, their financial performance.
Okay, so let's maybe start by digging a bit deeper into that history you mentioned. The move into jewelry, it wasn't just out of the blue.
No.
Well, the second generation, T.K. Sitharama Iyer, he really expanded the textile side first. So by the time the third generation decided to go into jewelry in 93, they already had a solid grasp of retail, managing stores, knowing what customers want.
Okay. So they had that retail DNA already. Makes sense. Let's talk about what makes them tick now, their strengths and strategies. The product range seems massive.
It is, and it's very deliberate. They haven't just accumulated products. They've created this diverse range, different sub-brands. It's all about targeting different people.
Different tastes, different regions.
Exactly, and different budgets, too, crucially. It means they can capture a much wider slice of the market compared to someone with just, one main brand identity.
Right, a strategy behind the variety.
Yeah.
Okay. They also talk about having robust and effective internal control processes.
Yeah.
Sounds a bit, corporate speak.
Yeah, it can sound dry. But think about their ERP system, Enterprise Resource Planning.
Yeah.
It's basically the company's central nervous system. It connects everything. Inventory in hundreds of stores, sales data coming in real time.
So they know what's happening everywhere, instantly.
Pretty much. It lets them make decisions fast, avoid stock issues, run things efficiently. You need that when you're as big as they are and still growing across India.
Like a central nervous system. I like that. Okay, another point. Effective marketing and promotion. We see the ads. Amitabh Bachchan, Katrina Kaif.
Yeah, the big names. But their strategy is interesting. It's trying to balance that big pan-India brand message with a very local feel.
Like being the neighborhood jeweler.
Exactly. They want you to feel they understand your local tastes while still being this big, trusted national name. And they've put serious money behind it, over, 10,000 million rupees in the last 4 years.
Wow, 10,000 million. That's huge.
It's a major investment in that brand image.
Okay. Then there's this extensive grassroots My Kalyan network. Sounds very hands-on.
It is. The My Kalyan network, it's not just about stores. They have nearly 3,926, to be precise, people dedicated to outreach.
Outreach, like what?
Building relationships right there in the community, maybe smaller events, direct engagement, really getting to know the specific needs of a neighborhood, stuff a big national campaign would just miss.
Making them feel like your local jeweler, even if they're a national chain.
That's the idea. Deep distribution, local connection.
Got it. And that ties into their focus on trust and customer experience.
Yeah.
That feels fundamental for jewelry, doesn't it?
Oh, absolutely critical. Jewelry is a big purchase, often emotional, long-term. So things like after-sales service are vital for keeping that trust.
And the store experience itself.
Yeah, they talk about that too.
Right.
Making the showrooms welcoming, having a wide range of ready-made stuff so you're not just looking at catalogs, comfortable surroundings, security, trained staff. It all adds up.
Right. And building on that trust, they mentioned transparency and quality. How do they show that?
Well, some tangible things, like having meters in the store.
You can check the gold purity yourself.
Exactly. Takes away some of the mystery. They also talk about transparent gold exchange, doing it right there in front of you.
Okay.
Plus, certifications guaranteeing purity, lifetime maintenance, exchange, buyback policies. It's all about giving you confidence.
Okay, making the whole process feel safer and clearer for the buyer. Let's shift to their footprint. Pan-India reach, but also localized. How does that work?
So the numbers first. 90% of their showrooms are in India. That includes Candor, their online brand, and 10% are outside India. But the key is this hyperlocal jewelers strategy. It's about really digging into what local people want. Specific designs, cultural preferences.
They actually gave examples, didn't they? In Mumbai.
Yeah, that was interesting. They pointed out how in Thane, Maharashtrian designs are popular. In Vashi, it's more South Indian tastes. Borivali caters to Gujarati and North Indian preferences. And Ghatkopar, also heavily Gujarati.
Wow, that's specific. Down to the neighborhood level.
It shows they're really trying to adapt the offering, not just push the same thing everywhere. It's understanding those micro markets.
And that must link to the brand ambassadors, too, using both national and regional stars.
Precisely. You have Amitabh Bachchan and Katrina Kaif for that big national recognition. Everyone knows them.
Right.
But then you bring in someone like Prabhu Ganesan in Tamil Nadu, Pooja Sawant in Maharashtra, Ritabari Chakraborty in West Bengal, Kinjal Rajpriya in Gujarat. Those regional stars connect on a much more local, authentic level, builds that regional connection.
Smart. National reach, local feel. Okay, let's talk tech. How's technology fitting into all this?
They're using it quite broadly. Data analytics is a big one. They analyze customer data to personalize outreach,
Oh.
like using targeted content marketing, even down to local store microsites. They also track digital footprints, people browsing online, and follow up to try and boost conversion rates.
And then there's Candor.
Yeah, Candor is their online and omni-channel platform. It's their digital-first brand.
So it's separate from the main Kalyan site.
Operates as its own thing, yeah. Gives them reach not just in India, but also the US and UK. They even have things like an online gold ownership certificate.
What's that?
Lets you buy gold online, lock in the price maybe, and then you can redeem it for actual jewelry later in a physical store. Bridges online and offline.
Clever. What about tech inside the stores?
They mentioned digitally enabled My Kalyan centers and other tech in-store. It's used to capture customer info, run targeted campaigns.
Like special offers.
Yeah, maybe instant dynamic voucher codes for upselling. They even try to map social media activity to understand customers better.
Building a pretty detailed customer profile, sounds like. Let's focus on Candor for a second. It seems important for their future plans.
It definitely looks that way. It started back in 2013, e-commerce site in 2014, and then Kalyan acquired it in 2017.
And it's grown since then.
Significantly. Over 100 product categories, more than 4,000 designs. Their average sale value has gone up too. And interestingly, they've started opening physical Candor showrooms.
Physical stores for the online brand.
Yeah, Foco showrooms, franchise-owned, company-operated. They had 37 as of March 2025. And Candor brought in 1,638 million in revenue in FY25. So it's becoming quite substantial.
Interesting mix. Online brand going physical. Okay, back to the main operations. Those robust internal processes and controls again. What else stands out?
Well, that ERP system we talked about, it gives them that real-time inventory view across the whole network. Super helpful during peak times like wedding season or festivals.
Managing stock efficiently.
Exactly. And strict inventory management overall. Unique barcodes on every single item for tracking.
Given gold prices fluctuate, that must be crucial.
Absolutely. And they hedge their gold inventory, too, to manage that price risk. Plus, they do regular inventory checks daily and monthly to keep everything accurate.
Sounds tight.
Sure.
What about sort of the corporate side? Governance.
They highlighted that, too. A strong board with an independent chairperson. Members seem to have diverse backgrounds, retail, finance, marketing.
And auditors.
Top-tier firms. They had Deloitte for 10 years, up to 2024, and now it's Walker Chandiok & Co., LLP. Shows a commitment to, proper oversight.
Right, experienced leadership and good checks. What about the actual people running the show?
Yeah.
The promoters, the management.
Some really long tenures there, which often signals stability and deep industry knowledge. Mr. T.K. Sifaram, Mr. T.K. Ramesh, they've been with Kalyan for ages.
Decades of experience.
Right. And the non-executive directors bring outside expertise too. Like Salil Nair, former CEO of Shoppers Stop, knows retail inside out. Anish Kumar Saraf from Warburg Pincus brings capital markets experience.
And the independent directors.
Impressive backgrounds. Miss Kishore Jayendra Udeshi was the first woman deputy governor of the Reserve Bank of India. Huge finance and regulatory knowledge. And Mr. Anil Sadasivan Nair has a strong advertising background.
So a good mix of internal experience and external perspectives.
Yeah.
And the key managers.
Also experienced. The CFO, Mr. V. Swaminathan, has over 30 years in finance. The head of technology, Mr. Arun Sankar, nearly 20 years in tech. Seems like a solid team.
Definitely sounds well-rounded.
Uh,
Okay, let's get to the numbers. Q4 FY25 for India. How did they do?
Pretty strong growth story in Q4. Revenue was up 38%, went from about 38.7 billion to 53.5 billion year on year.
38%. That's a big jump.
Yeah, and they expanded their footprint significantly too. Showrooms went from 204 to 278 in India.
Wow. Over 70 new stores in a year. How did that impact profits?
Profits looked healthy too. Gross profit up 30%, reaching over 7.1 billion, and PAT profit after tax grew even faster, up 41% to over 1.8 billion.
41% patty growth. That's impressive.
EBITDA was also up 35%, and just in that last quarter, Q4, they added 25 new showrooms in India. That's more than double the 10 they added in Q4 the previous year. So expansion seems to be accelerating.
Okay. Strong growth across the board then. What about the balance sheet? Comparing the full year FY25 versus FY24, consolidated and India view.
Generally seeing improvements there as well. ROCE, return on capital employed, ticked up slightly for both consolidated and India. Same for ROE, return on equity. Small increases, but positive.
And inventory management.
Inventory turn improved, went from 2.4x to 2.8x consolidated, and 2.5x to 3.0x for India. Means they're selling through their stock faster, which is more efficient.
Good sign. What about debt? Always important.
Looking better there too. If you look at net debt to EBITDA, including their old metal loan,
Which is common in this industry.
right, that ratio decreased for both consolidated, 1.8x down to 1.5x,
Right.
and India, 1.4x down to 1.0x, less leverage relative to earnings.
Okay.
But what's really interesting is the net debt to EBITDA, excluding the gold metal loan. For the consolidated business, it actually went negative. Minix 0.1x, means they essentially had more cash than debt, excluding that specific gold financing.
Wow, net cash positive.
Yeah, and for India, it remained very low at 0.2x. Similar story with net debt to equity ratios. They also improved, both including and excluding the GML. The balance sheet is definitely getting stronger.
That's a clear positive trend. So finally, let's look ahead. They IPO'd back in 2021. What's happened since, and what's this phase 4 they talk about?
Well, since the IPO, they basically used the capital to fuel growth. They expanded revenue, profits, navigated COVID, also brought in that independent chairman we mentioned.
Okay, and phase 4.
This seems to be a shift in strategy. They're talking about a more capital-light expansion model,
Right.
primarily using franchise stores.
Franchising. So less of their own capital tied up in new stores.
Exactly. The idea is to focus more on generating free cash flow, paying down any remaining debt deleveraging, and maybe rewarding shareholders more, potentially with dividends.
So keep growing the footprint, but have the franchisees bear more of the setup cost.
That seems to be the core idea. The presentation notes that inventory investment and most showroom costs, apart from maybe staff salaries, fall on the franchisee. It's a different way to grow, leveraging the brand they've already built.
Got it. A strategic shift towards a lighter asset model. Okay, let's try and wrap this up then.
Sure.
So what we've seen in this deep dive is Kalyan Jewellers really leveraging its century-long legacy. But they're not stuck in the past.
No, definitely not. They have this multifaceted strategy, big focus on localization, that hyper-local approach, strong emphasis on customer experience, building trust.
And using technology quite clearly across the business.
Right. And the recent numbers, Q4 FY25, show pretty strong growth financially. Plus, they're actively strengthening the balance sheet.
And now pivoting to this capital-light franchise model for future expansion seems like a move towards balancing growth with maybe more financial discipline.
Yeah, focusing on free cash flow, deleveraging, shareholder returns. It looks like a strategic adjustment for the next phase.
Okay, so here's something for you to think about. Kalyan Jewellers is blending this really deep tradition, that 100-year history, with a very modern, tech-driven approach. How do you think that balancing act between tradition and innovation will play out in shaping jewelry retail in a place as diverse as India?
That's a great question, and maybe tied to that. What about this shift to franchising? What could be the long-term effects on keeping the brand experience consistent everywhere? On customer loyalty when the local store is run by a franchisee, not directly by Kalyan?
Yeah. Maintaining quality and that trust factor across a franchise network. Definitely something to watch. Some interesting things to ponder there. Thanks for diving deep with us today.